Shout out to Jay Spargo, welcome to MMO Gang. He made £255 profit from forex. This is what I love to see. If you want to be shouted out on the next video, just send me a DM on Twitter of your profits from anything, ranging from forex, e-commerce, dropshipping or whatever. Alright, let's get it. It's Poku Banks, and today I'm going to talk about the investment mistakes that I've made in my journey of investing and the lessons I've learned from them. So the aim of this video is for you to, number one, learn from my mistakes, and number two, understand that there's going to be a lot of hurdles and challenges across the way on your way to success. Now, a little bit of backstory, let me just tell you guys, the reason why I started investing is for one, social media. Now, on social media, you're able to see the whole world at your fingertips. You can follow who you want and what appeals to your eyes, and what appealed to me was a lavish lifestyle. So seeing exotic cars, nice jewelry, designer clothes, beautiful houses, all of this influences the way you think. And it wasn't long after that I noticed that in order to have such a lifestyle, I can't just be working a 9 to 5. I need to be able to, invest my money to build my wealth. So this then got me looking into trading. And when I was younger, I always wanted more. Therefore, I needed to make some sort of income. And another reason why I got into investing is the book Rich Dad Poor Dad. Again, I've recommended this plenty of times. Go check it out if you haven't. This book is what kickstarted my journey into entrepreneurship, as it really made me think differently about the way I see things. Now, the first mistake that I made in my investing journey is investing in what I don't know. Now, what I mean by that is simply investing in assets for a capital gain, having no fundamental knowledge about what I'm investing in. I'm just doing it for the money. A perfect example of this is taking tips. This basically means you're investing in something just because someone else says so. You're taking their word for it and putting your money into something that you don't know will do well or not, just for the capital gain. This should be common sense, but just because someone else said that you should invest in something doesn't mean you should. And the biggest trap that a lot of people fall into is when someone's giving them the correct tip, they become over-reliant on that one person. They become heavily dependent on their tips just to make money. Why? Because they believe in them. And this is the wrong way to go about it. You should do your due diligence and always research before investing into anything. And another example of what a lot of people fall into, including me before, is following the herd, as in being a sheep, following the mass. Just because everyone's investing in it does not make it a great investment to take. And a perfect example of that is Bitcoin. Once it reached post 15k in 2017, it was all over the news channels, it was all over social media. Everyone knew about Bitcoin. And everyone rushed to invest their money into Bitcoin. Why? Because everyone else was doing it. Everyone else was making money of it. Little did they know that was near the peak. Once everyone's getting involved, that's when you need to leave. Just like Warren Buffett said, be greedy when others are fearful, but be fearful when others are greedy. So the lesson you should learn from this is before investing in anything, do your research, know what you're investing into, know what you're playing with. Don't just go in blind just because everyone else is doing it, or someone else told you to do so. Stop, don't forget to like and subscribe, you don't want to miss out on this content, trust me. The second investment mistake that I've made in the past is not having an exit strategy. Now, let's go back in time to 2017 when cryptocurrency was booming, as in anything you could have invested in would have made you at least a 3 times return on your money. Back in 2017, you could have invested into any cryptocurrency, any cryptocurrency, and you would have made a return. That's how crazy it was. Litecoin, Bitcoin, Ethereum, Ripple, Monero, Dash, all sorts. That year was so lucrative, so profitable. I know someone that made over 300k off Ripple. It was crazy. Now, 17-year-old me was looking at the crypto market for a while, and I thought it was a little bit too late to get in, but I still got in anyway. I bought Ethereum at around £380. I forgot roughly how much I invested in the Ethereum, but it'll be on the screen exactly how much I spent. But it was around £360 or £380. And like I said, it was a booming market, so within a few days, I was already 30% up on my investment. I was living life. Within weeks, I doubled my investment. Ethereum shot up to around $800. And then after 2017 ended, it came into 2018. This is where all cryptos hit their all-time highs. Ethereum shot up to $1,400. Bitcoin was nearing $20k. Litecoin was like $250, $300, I forgot. By this time, I tripled my investment. So the £360 I spent was worth 1.2k. I'll be real, I was spending outrageously just because I knew that my investment was doing so well. That's how crazy it was. I fell in love with my investment so much, I didn't even want to sell it. I just wanted to hold on to it. I wanted to ride it to the moon. I was waiting for it to hit 20,000. And guess what? The dreadful day came. I think it was the 17th of January, 14th, one of those days. And then that one day, everything came crashing down. I think I lost about 30% of my investment that day. But I wasn't too fussed. I was still optimistic in Ethereum. I thought it was just a one-off correction. It climbed a bit, little correction, and then keep going. That's what I thought initially. It just kept going down and down and down, and it wouldn't stop. And like I said, I fell in love with my investment. I just held on to it for too long. And as days and weeks passed on, my investment kept going down and down and down. I didn't even think of cashing out. I just kept holding on to it. Eventually, it actually reached my entry price and went even further down, so I got into negative equity. And believe it or not, I still hold it till today. Now the lesson from that story is to simply have an exit strategy. What the 17-year-old me didn't realize is that I'm in here for profit. I'm here to make a gain. I'm here to make my investment and get out of the game. And the worst feeling was seeing other people enjoy their profits. It was just heartbreaking for me, man. And from then on, anything I invested into, I always had the goal. How much am I getting in for? How much am I going to get out for? Now, to be honest, if I could go back in time, I would have sold 75% of my position at 100%. So basically doubling my money. I would have sold 75% of it and kept 25% in just in case it goes even further up. The third investing mistake that I've made in career is getting involved in pump and dumps. Let me explain. Now, pump and dump is essentially where a group of individuals come together to collude and artificially rise the price of an asset. These individuals in particular have large amounts of this asset that they're driving up. Their aim is to create hype on internet and influence other people to buy more of this asset. As more people buy, it drives the price up even more. And it gets to a point where the graph of this asset becomes very, very parabolic, increasing at an extraordinary rate. Now, like I said, these group of individuals are colluding, so therefore they're orchestrating the whole move. Now they've got people like you to drive the price of the asset up artificially. Once it reaches a target, a certain price, all of the people involved in artificially pumping up this asset will sell the asset, therefore dumping it down to oblivion. As they all own large amounts of this asset, that means it will increase the supply of this asset, therefore lowering price. And just like that, the price of asset is decreased by 50% already. So at this point, it's a race between the general public to sell the stock as quick as possible to minimize any sort of losses or lock in any profits that are left over. And this is why they're called pump and dumps. They pump the price of the asset up and then dump it down. Now the pump and dump that I was involved in is called Nano, or also known as ride blocks back in the day. I'm going to show you a chart of this cryptocurrency and you can just see for yourself the pump and dump in action. I would say I lost about £200 from investing in what I don't know. I invested around £200 into Nano, so that's what I've lost essentially. Now the lesson you can learn from this is to avoid pump and dumps and focus on the price of the asset and see why it's increasing. If an asset is increasing at an alarming rate without any reason for doing so other than people telling you to invest into it, stay away. This is also known as when a stock is overbought. Now the fourth investing mistake that I've made in my career is relying on someone without a track record. Let me explain. Now in 2018, I'm not going to mention the person because I'm not trying to cause any trouble. There was a trader that I was following on Snapchat for a while and I saw him making profits here and there. You know, he was a young guy and he was making a lot of money and I really wanted to be a part of what money he was making. And at this time, I was doing my A-levels. I was in year 13, so this is where stuff got serious. And I wasn't really trying to focus on trading. I was trying to focus on my grades. So I thought it would make sense if I give my money to this guy to trade for me, to give him my percentage back. I've been following on Snapchat for a while. He's been showing his profits on the Snap and it looks good. So I thought, you know what, let me invest my money with him. I invested £1,000 with him. That's of my own hard-earned money. Now, I invested in him based on what I've seen on his story. What you need to remember with social media is that you are in control of what other people see of you. Therefore, if you are a trader, you can only show your good days, show your profits, never show your losses, and people will think you're the best trader in the world. And I fell for the trap. So cool. After giving him £1,000, he turned that into 1.6k in one day. I was so excited after seeing that. I thought, you know what, I could trust this guy with anything. This guy can make me a millionaire. Now enter the next day. I checked the account and it's on £800. So he's lost half of the account in one day. So at this point, I'm thinking, you know what? He knows what he's doing. He's made me profit before. You know, I trust him. Let me just let him do his thing. Cap. Guess what? He lost around £600 the next day as well. So I was left with like £200 left in the account. And guess what? The next day, he lost the rest of the money. And you know what's funny? I wasn't even angry. I was more angry at myself for even, you know, not doing my due diligence. Not getting a track record. Not knowing what this guy's like. Because he's literally a gambler. The way he was trading was gambling. It wasn't trading. He was risking extraordinary amounts of the account. I now currently trade it, and now looking back, that guy was moving crazy, like with the money. There was no risk management whatsoever. And you know what's even more funny? He even had the cheek to ask me to invest more money back into him because he promised me he'll flip it again. So yeah, I lost £1,000 just for trusting an idiot. And the lesson you can learn from that is always ask for proof, ask for a track record, or only invest with someone that someone else has had an experience with that you know personally. Now look, if you got to this part in the video, you're probably thinking, okay, look, I don't even want to invest, I don't even want to touch it, this is bad, I'll lose money. No, don't think like that. In my opinion, I love taking L's. I love taking losses. I feel like they're the best thing that can happen to you as a person or as an entrepreneur. Firstly, taking L's builds wisdom and it can act as lessons. L for lessons. Since I took the loss personally, it actually helped me develop and learn from the mistake. Why? Because it actually helped my bank account. And trust me when I say this, success is a lousy teacher. It doesn't teach you how to develop as a person. It just shows you that you're winning. You know them teachers that give you the answers to make you feel like you know what you're doing, but in reality you don't? Whenever you take a loss, always remember, what can you learn from this lesson? Don't think of it as a failure, think of it as a lesson. What is it trying to teach you? What should you do next time to avoid this failure? Imagine you start something and you see success straight away and you see no L's, whereas someone else has been through the L's, so once those problems arise again, he knows what to do. Whereas you that's gone through success, you don't know what to do, you're stressing. Why? Because you don't know what to do, you haven't been through that. You haven't built wisdom. Now anyways, this video is a gift from me to you. Thank you all for getting to this point in the video. Just to prove that you got to this point in the video, just comment which investment mistake have you made in the past and how you improve from that. Hey, but I hope you enjoyed it though. It's Poku Banks, baby.